It has been an absolutely incredible week in financial markets, and it affects your planning strategy. Welcome to Jay's Corner. My name is Jay O. I'm a certified financial planner. I'm education fellow at the Alliance for Lifetime Income, a nonprofit focused on the value of guaranteed income for financial planning reasons. I'm also the author of Maximize Your Medicare. So, we've learned a number of new things. There are new facts. These can change the world, that change the way that you think about things. Incredibly instructive week to many. So let's just start here. Uh, it's right here, which is that there's my newsletter. First of all, Jay's Corner, jo.substack.com. It's in the text below the video. Be sure to, there's a free version. There's also premium content there for subscribers only. So right on Wednesday here, let's just start here. The Federal Reserve dropped interest rates by 25 basis points. This is known. But what is new is the fact that they threw the market a curveball by basically telling you that inflation pressure is still elevated. And this is a point that I made on prior broadcasts to other prior live broadcasts over the past couple of weeks, which is that interest rates were too high, meaning that the market was telling the world, look, we don't necessarily think that interest rates are going lower at the speed that other financial markets may have discounted in the price. And so now you can see these fancy little pictures here, and I don't even have the most important one, which is NPV, which is interest interest rates are the main, they're the soup base of every minestrone soup. We'll talk about minestrone soup, my analogy that I try to explain the way that finance actually works. So let's just keep going here. So the Fed has, it is not the fact that they dropped interest rates 25 basis points. That is not the central headline here. What is the headline is the fact that the future rate pressure downwards cuts are now in question. And we see it here. This is, for example, a copy of this particular video here.
We'll probably start having inflationary pressures towards the middle of 2025, and the headline CPI rate will probably not be below 2.5% when the inflation rate starts heading up towards 3. Now,
And now you can see it. This is not just your average person. This is Jeffrey Gundlach running the largest bond fund in the world, and credible. So first of all, let me just say indisputably credible that recording happened, that broadcast occurred immediately following the Fed's press conference, Jay Powell's press conference about interest rates. Stock markets did not like that. Risky markets would not like that. Of course not. So you can see, and you'll just see it here. I'll just put it in front of you. So you can see that, 5-day, yes. That you could see from here an immediate drop. That when the Federal Reserve changed the expectation of interest rates, what ended up happening is very simple to understand, which is if you take a look at this, basically down here, this is what people think about the denominator here. And what basically happened is people have been presuming this is lower, but now they have to adjust their expectation to flat and if inflation spikes, higher. This is still unknown, right? We are still here. And now you can understand why, like a broker record, I continue to show this graphic. We're still here. And nothing stops interest rates from going higher. We are still here. And in that case, you can see what ends up happening. The effect then would normally be expectedly be, which is NP because I has gone higher or may go higher, NPV lower. What's NPV? The price of risky assets. What's the one that most people will understand and know? Equity. And now you can see it. And we'll talk about this past Friday separately, perhaps, time permitting. But you can see what happened here, which is immediately down. Actually, the Dow Jones Industrial Average, which is the equally weighted average of 30 stocks chosen by Dow Jones, had been declining for something like what, 2 consecutive weeks every single day in a row, an unprecedented daily decline. They kind of told you this, which is the market telling you that, hey, something was weird about the NPV. Meaning it's not only about the numerator. For newcomers here, this would be new news. For people who are followers of Jay's Corner, tired of my phrase, stocks for show, bonds for dough. The reason for that is it's about understanding about how this mechanism works. You are not getting away from the denominator. And very tongue-in-cheek by me, this is like the Federal Reserve basically stood up to the press conference and said, you're still playing on our playing field. Yeah, we think that, stock growth is this or that or whatever. And the Federal Reserve, whoa. You're still just, you're an underling here. We're running the show. And the bond market shows up to tell you this and remind everyone, which is why it's a very instructive week. For people, newcomers to, you're interested in financial markets, you're watching Bitcoin or whatever it would be. We'll talk about Bitcoin Microstrategy as a second segment. But you can see it here, which is that the Federal Reserve basically reminded everyone, look, denominator. In other words, stocks for show, yeah, but bonds for dough, right? In other words, that's fine. You can hit the ball 250 yards off the tee. Yeah, but if you 5-putt, you're still bad at golf. Indeed. That is ultimately, the main driver. And the reason that matters is that I've been making this point about this, which is this affects the way that people will allocate across bonds and stocks in general. So from 5,000 feet, your 401k will have something called a targeted date fund. Almost certainly. It's the default position. That is that companies, whoever it would be, let's call it Fidelity or Vanguard, BlackRock, every one of the brokers or the wholesalers, creators, will have their own version. Schwab, they'll all have something that does this in some form. Right? Congratulations to you if you've created this form, you've won the Nobel Prize. And yes, the largest investors in the world, again, the largest investors in the world are using a variation of this theme. But it's still the same theme. Make no mistake. It's still this singular theme. How they're allocating, how they're balancing is the determinant, the number one determinant of your performance, how your savings and investments will do through time in the longer run. I didn't say day to day. I'm not saying hour to hour. Over the long run. So for example, if you're planning for the future and you know that this is going on, you need to understand that diversification and things like the oops. I see that we're actually not at that. Not great at videography, but you can see it here, which is you can see this graph is showing you different allocations amongst bonds and stocks. The issue here is that since the NPV is different, because of this, what ends up happening is people will slide across this. And one of the reasons for that, and I realize I'm going very quickly, right, is the fact is something called the equity risk premium, which basically boils down to, am I being paid enough for buying risky securities, given the fact that I can get X percent in the bond market by lending money to the US government, which is now 4.5% a year, guaranteed for 10 years. And you could say, yeah, the government's not going to repay. Okay, under that scenario, none of this stuff matters, right? So I'm not. That is still ultimately the risk-free security. The point here is that when bond yields, interest rates increase, it throws into question and it highlights what has been going on for the past few months, which is that, and you'll be able to see it, I've explained it in other videos, that the equity risk premium is now effectively zero. So what's happening here is that the people that are measuring this are looking at this over time, all the time. And as a result of higher interest rates, the balance can be called into question. Well, if the richest guy with all of the money decides to sell 3 houses on your subdivision, guess what happened to your house? It doesn't matter if you think he's right or wrong. You just need to understand this is the mechanics. These are the mechanics, the mechanism, how the decisions are made, so that you can understand whether or not you are affected, right? Because an individual investor just doesn't register, right? Because CalPERS is out there. Bank of Taiwan, Government Investment Corp of Singapore is out there, right? With many hundreds of billions of dollars. They reallocate, you get pulled along. And I'm giving you insight on how they're making the decision for this allocation. And you have access to it. Like I said, 401ks, the default position is usually targeted date fund. Not in this day and age. That is a trend that has evolved over the past years. Don't get me wrong, the 401k fund administrators have done well to evolve savings and investments in 401ks into this. Because why? We know this to be accurate. Ask your engineer, your nerdy engineer friend, is there any chance that linear algebra is wrong? They'll laugh at you. They're like, no, there's no chance it's wrong. That's what this is. That's what this is. Okay. That's all I'm going to say about the Fed here and its effect on strategy, right? I'm not talking about, buy low, sell high within a day. That is something I've discussed strategy. I'm going to move now to something which is short term, which is tactical. Okay, so you'll read these phrases sometimes in the press. Tactical versus strategy. Right, and then interest rates, bond prices are inversely absolutely correct. Came into the chat. That is absolutely right. Right, and that's the mechanism here. It's a very good basic, very important understanding, which is kind of why stocks for show, bonds for dough, because every security has this. It does not matter. Your home value, your rental home property, right? Interest rates higher, price lower. The end. The end. And so as a result, right, that's why I always say, right, all the news is about the numerator. Oh, well, Google's going to make X dollars a share, Y dollars a share. Next year, it's going to make Z dollars a share. If you see the error rate on that, is like incredible, and all still dwarfed by I. There's a reason. There are other reasons for stocks for show, bonds for dough, right? I mean, this is the bigger market. This is the more important market. This is staffed with the people, the professionals in the room. That ends strategy talk, if you will. Like strategy, this is my encouraging way for financial planning people, financial planning clients, understanding of finance is that over long periods of time, the idea that, oh, let's just buy Apple here, because they've got a great iPhone, that has nothing to do with the construction of this graph. Not Apple, not a single stock. A singular stock is not the input here. It isn't. Can the ripple effects affect it in the short run? The answer is yes. And that's where we are going now. This is Microstrategy. So many people know what Bitcoin is, of course. Right? If you take a look at YouTube, you see tons of videos about cryptocurrencies. Right? So first, a couple things. Number one, you may see extremist type statements to say that crypto and Bitcoin's a scam. Bitcoin isn't. I'm not going to speak here about meme coins. That's a different thing, right? Hawk to a meme coin. That's a different thing. I'm talking about Bitcoin specifically. The reason I'm using it specifically, and you could say the same thing for Ethereum, by the way, is this particular security here, right, is the ETF of Bitcoin, and it has been registered with BlackRock, which happens to be, not coincidentally, the largest manager of financial assets on the planet. And by manager, it means that more people have invested into products with BlackRock's label than any other. Right? They're not the owner of the stocks inside the ETF, right? You are. But nevertheless, the point is that they had to register these securities with the SEC. It gave it credibility, institutionalized credibility. Right? There are technical points about crypto. On Jay's Corner in the videos, I've mentioned this years ago about the way that I saw Bitcoin and cryptocurrency as a whole. Bitcoin can be thought of as a digital currency, digital gold, if you will. The question is its price. The outstanding technical point about Bitcoin is that the supply is fixed. So it's not even like a company, right? I mean, for example, let's take Moderna. That when the hype grew and the stock price increased, what do? They sold more shares. Right? So in other words, you had the same company, but there were all of a sudden double the number of shares. And I'm just making up the example. I'm not here to tell you, how I can't remember how many more shares they issued, right? So they diluted the value of what you owned immediately. Here under Bitcoin, that doesn't happen. Why? Because the supply is fixed, more or less subject to debate. I'm going to say that star, but our current understanding is that the supply of Bitcoin is fixed. As a result, right, you don't have this other mechanic that can exist at private companies. And it does happen at private companies. We're about to get that to there now, which is Microstrategy. So this is a company that, is not in the mainstream. It's not in the mainstream. Here is my explanation. It is a complicated one. We're going to go quickly here. I've already been talking for 22 minutes. So Microstrategy is a company where 96% of the assets are Bitcoin. We're going to ignore the other 4%, even if 4% is Rumpelstiltskin and like Prince money. The focus here is on the 96% of the assets. The issue is that the value of Monster stock today is somewhere in this 2.5 times the value of its Bitcoin holdings. So if you had 100 Bitcoin and let's just use $98,000, if you had 100, right, it'd be worth 9,800. But let's say in fact there was only one share. The point here is that this is as if the shares were 2.5 times it. So why? You've got some securities worth 9,800. The shares of this stock where 96% of the assets are in that security is 24,500. That's elevated, to say the least. There's always elevation, by the way, right? Meaning that a bank doesn't sell at its book value. It doesn't. So now this is what I'm saying is it's subject to the ratio of the stock divided by Bitcoin. And the reason for that is something, and you can look this phrase up, I'll explain it at some point here, which is Bitcoin yield. Which they're raising money in order to buy Bitcoin today, which will benefit because their fundamental view is Bitcoin will rise in the future. And that has accelerated a lot as a result of the fact that this now exists. And so, yes, you can see, in fact, that if we take a look at the year to date, yes, an astounding 431%. So what you would say about it? You would say that, okay, the underlying Bitcoin has increased, and then this ratio, 2.5 times, has also accelerated because the selling of this message has been successful to the investing world. Investors who include speculators, okay? I'm not, which is different than, again, different than the investors, which are the planners, planning, long term. In the short run, tactically, I'm explaining about the dynamics of Bitcoin and what's going on with MicroStrategy. Now, the news here, the reason that you may have seen this accelerate here, it's been extraordinary week. And like I said, we had strategy talk for the first 20 minutes. We got tactical talk here, which is they just issued a convertible bond. And here's the Bloomberg article here. When I saw this article, I sent a text to a friend of mine, said, this is an issue. So my original home is from the playing field, what I call the playing field, which is kind of my modest way of saying that there are not almost any of these hedge fund strategies, which will be news to me. Just leave it there. So hedge fund make Microstrategy Wall Street's hottest trade. I'm going to do my best to try to give you a feel for the components of what this article is saying. Right, and you can see here, MicroStrategy is busy issuing convertible bonds. And this is what I'm saying here. The Bitcoin yield is they're using the capital to buy Bitcoin now. In other words, now you can see it. MicroStrategy is raising capital by selling bonds. A specific type of bond, which is in the, not well known. It's legal. Don't get me wrong. This is everything here legal, right? So no, not a problem. There are many different other types of securities other than just stocks and bonds. They're hybrids, and convertible bonds is a hybrid of sorts. What's a convertible bond? Let's just go through here. So MicroStrategy has raised money by selling the bond. Yes. In the future, this is the way the payoff works. And we're not going to get to every last technical, right? Because that is the purview of, hedge fund professional investors, default swap trading. In the future, owners of the bond can convert to X shares of MicroStrategy stock. I'll stop calling it MicroStrategy stock. So now you can see the complication here. This security is dependent on the value of MicroStrategy. MicroStrategy itself is entirely dependent on Bitcoin. So by the transitive property-ish, right? The convertible bond itself then is a statement about MicroStrategy and also this ratio and of Bitcoin itself. In other words, very complex combination of crossfire. Very complicated. To give you an idea, convertible bonds exist in many walks of life. There are many, many companies, names that you will recognize. Some you won't, but many you will. And the strategy here is people are buying the bond and trying to unlock the value. So followers of Jay's Corner, jo.substack.com, y'all, is that to try to explain to you finance is like minestrone soup. It's my silly analogy, right? Which is lots of ingredients. As a person on the private level, right, your version, your brand of preferred minestrone soup may be slightly different than your friends. It may be slightly different than your spouse's. Ultimately, though, inside the minestrone soup are a bunch of ingredients. And what Wall Street is doing is that if they find the ingredients in there which are underpriced or overpriced compared to the can of soup, they're in there trying to get the difference. That's what they're doing. So in other words, oh, well, this can of minestrone soup, someone actually inserted black truffles in there and sold it at $4 a can. Guess what? All the people go and buy it, try to extract out the black truffle, right? And sell it at $300 an ounce. Or I don't eat truffles. I don't even know. But all I know is that's a very expensive ingredient, right? So as a result, that's what they're trying to do. And the same thing is happening here. Similar. And here it is here. So they're buying the So this is a complicated, and in the world of hedge fund trading, professional trading are niches of investor groups, right? Are they going to be the high-flying names? No. In other words, generic bond fund. right? BlackRock Total Bond Fund, 100% professional, head of class, top of class, no problem. Agree with you there. In other, but another thing can be true, which is they may not have anything to do with these. That's a separate niche. This niche now, and that is going to be the way that we're going to end this, is I'm going to explain why the niche has, the ripple effect of the niche now has come to you. So you buy the bond. Like I said, under minestrone soup, they're not just buying the soup because the value is going higher. No, that's not it. They're buying it for a particular reason, that some component in there is very attractive, some ingredient, the truffle in there. And that is this conversion. That's this ability to, this option to convert into monster stock. So I'll stop calling it monster at some point. So anyway, what you have here is really you've got a bond plus options. And now I've shown you the ingredients inside the minestrone soup that they figure out then what these ingredients are. Right? So what's the bond worth? And then what are the options worth? Because the bond, let's call it, XYZ. And call the bond ABC. And call this DEF. So the question then becomes, right? The question becomes then, is XYZ equal to ABC plus DEF or not? When the answer is no, this is when the hedge funds are in. Absolutely. 100% of the time. Right? This is the sophisticated person in the room. By the way, this is the playing field that I'm describing. Right? This is the playing field that I'm describing. I'm sorry to tell you, not sorry to tell you, Acme Wealth Management is not involved here. That is not the definition of what I would call the playing field. I'm describing what's going on in the playing field here. So this replication then, and this is the reason I use this word of replication, because that is basically this. This activity is the replication. That's why I found this entire MicroStrategy situation very, very interesting, very instructive for people, very. Because it illustrates the principles which I've been like droning on in some boring fashion on Jay's Corner. Absolutely. Right? It highlights it because here it is. You may not have thought that, or maybe you thought I was just like talking to myself. Here it is, this security right here. So what are they doing? They're buying something and then they're going to say, okay, what's this options worth? What's this thing worth? Because they can convert into X shares of MicroStrategy stock. That is this options. So there's the things for puts and calls. And now you can understand right? Now you can understand why I've included this throughout Jay's Corner. This formula here is the theoretic valuation of options. And oh yeah, by the way, options all have this payout. Oh, and by the way, now you can understand why I get wrongly pigeonholed. But when I say tongue in cheek, I just have one job. My singular job as financial planner here is to measure this diagram sitting in here into every aspect of your financial life. By the way, some combination of these angles is dental insurance. Absolutely. Medicare, 100% the case. Health insurance, absolutely. Life insurance, annuity, all different combinations of this structure, which has this formula. And oh yeah, by the way, in today, now it comes to financial markets in a way that I can show it to you. That is correct. And that becomes the question. And, so we've got another question about how accurately can MicroStrategy predict option movement. It can't. And this is very important, is that this replication here, when I talk about replication, is not dependent on a crystal ball. Not dependent on a crystal ball. They are, when people are looking at this, they are not presuming where the price is going to be. They are looking at things on where the price is, and then they see what the actual market price of the option is, and they solve for that last circle there that is volatility. And this then is the phrase implied volatility. And that's what they're trading. They're not trading MicroStrategy. You think this is just, oh, I love MicroStrategy, I hate MicroStrategy. That is what the pundits might say. But what is actually going on here is that the professional traders are not trading. They are not necessarily. You'll see people say it's too rich, it's too cheap, it's too rich. They're going to keep this whole thing going. Okay, that's for that's numeratorville. Okay, what the professionals are doing is they're like, okay, given that they're not controlling the price, what they are doing is they're saying, okay, what's the volatility? In other words, now you've got the theoretical ratio of monster options, of MicroStrategy options. And now from there, the problems begin. Told you that there was going to be a punchline. Now the problems begin. Because what has happened here is, let's just say that someone presumed that the volatility, hedge, like super smart investor number one, presumes that the volatility is 30%. Super smart investor number three thinks it's 130%. Guess what will happen? It's not only, but there's a singular price because they can see that in the open market. What ends up happening? The hedge ratio changes. I told you, sell something. And this is otherwise known as, to the engineers in the world, the delta. The point here is that when it's this volatile, people are trading on this metric here, this statistic, which is the volatility. Well, guess what? That wildly changes the delta, which they're using to hedge. And what's the mechanism by which to hedge? MicroStrategy stock. Explaining. This is from 320 to 360 intraday. 4 divided by 320 is 12% in a day. This is 436 to 318. A swing of what, $100 on 420. In other words, you've seen volatility of 20% gross in some over 2 trading sessions. 2. And this is my point here, which is that because this is swinging around, because over here the disagreement on the volatility is so great, and the reason for that is twofold. One is is that this ratio is high, elevated. We got disagreements about that. And then, oh yeah, by the way, we also have disagreement about the underlying price of Bitcoin itself. So you've got layer upon layer upon layer of complicated inputs here. We're almost done. I've got 2 extra points here on the fact that everyday investor, planner, not a trader, right? So, and you've understood the first part of today's video, which is, hey, allocation drives this. Don't try to cherry pick bottoms and tops here for entertainment. It's been, so these few days have been great entertainment value to Jay. Absolutely. This is like compelling stuff. But for everyday people to just, because I've known that this is what had to be going on. So I've been sitting there, wow, this is pretty cool. And so high entertainment value, because, not my money involved. So I'm like watching it, but knowing what's going on here is, who I know to, don't get me wrong, this is not, right? This is not the dumb guy in the room. But at no point here have I, these are players from the playing field. Absolutely. Right? The non-players from the player, they don't attempt this. They don't. So my point here is that, so while this is going on and we see, very dynamic moving up and down, we're back to here where it's not this. You're not doing this, right? Microstrategy itself, it's a nothing-ish. And I say ish here, and this is why you need to know. Two things. Number one is that this is no problem if MicroStrategy sits in the corner and stays in the corner. That is not possible. Fact number one, MicroStrategy is going to be included in the NASDAQ 100 on December 23rd. That got announced this past Friday. I actually knew this past Friday. I'm like, whoa. This article came out. I'm like, this is going to be very interesting. The Fed then added their own, and now we had a week. I woke up. I'm like, oh, now I'm paying attention. Because the issue is this particular security by itself, even without the backdrop, has 25% volatility in 2 trading days, which then can affect the NASDAQ itself. Now, is it going to move it around by the same degree? No, it can't, right? Because it's not 100%. They're going to have a weighting. But the issue then is the weighting, right? Because hasn't Trump's sudden embracing of crypto encouraged, emboldened? Has it emboldened the comments? I don't think that as a catalyst, I don't think that there's any doubt about that is the answer to the question. This is Jay's opinion corner, right? I agree with that. But this isn't about that. This is about this ratio, whether it commands this ratio. The value of MicroStrategy is not 1x of Bitcoin, right? This is why I started this. If, let's just say, the entire company was just one Bitcoin, it's as if it's not trading at 98,000. It's as if it's trading at 245,000. That's the issue. And that is entirely faith on this entire ability to continue to raise capital in this way, to keep pushing it up. And multiple things can be true. To be candid with you, I didn't want to see this. I hope this kind of thing, not because what they're doing is wrongdoing. I want to be very clear about that. But what I'm saying is this kind of ability to speculate on what was already very volatile added fuel to a fire that was already fully lit. So you've added an accelerant that I didn't think was necessary for everyday people, because everyday people correct. Everyday people, right? Bitcoin, my point has been that crypto can fit in here in a rational way. A rational financial planning allocation makes sense here. I've discussed how this thing is built with others. Diversified portfolio. Now you can see it, which is you see ratios of allocation. Can cryptocurrency play a role in there? The answer is yes, it can. That's my view. And oh yeah, by the way, that's BlackRock's view. The issue here is this, is that you've got this inclusion into the large indices. And this then is ticker QQQ. The dominant technology, right? So sitting in with Apple, Microsoft, Google, Meta, NVIDIA is now this turbocharged security who's running around like this. And you can see here, yes, year to date is 431. High to low is minus 25. So if somebody has bought here at 473, right? For every price, there's a buyer and a seller. That means there's a buyer at 473. Which means, and at the worst, you could see it, this here, that means it went from 473 on November 20th down to 326 within a month. 423 to 326, down a quarter. On a single security at the same time that the NASDAQ has been flat to up a couple of percent. That one of the components is swinging around in this fashion. That's my point here. And so what you have is this extra volatility sitting in here. What if the big guys lose? What do I mean here? So earlier in today's video, what I did was I said, okay, let's just pretend you're the richest guy in the neighborhood. Right? And this person is, let's just say he has a tax problem. Uh-oh. And now the richest guy in the neighborhood, who happens to own 3 houses in your subdivision, forced seller. what ends up happening? So he either has to pay the IRS with cash or he has to sell the three houses. So what does he do? He doesn't sell the three houses. He sells something else. Apple. And so now you can see the feedback loop. And this has this has happened, right? I'm not making this stuff up. This is what happened on meme stocks. This is absolutely what happened. So 2 years ago or something like that, there are these big media. There's lawsuits still being sold. There's the big multimedia hedge fund, as well as was this GameStop, right? And there was I can't remember the theater owner name fails me at the moment. AMC. So what ended up happening is big gains, big losses, blah, 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 hold on for dear life, hodlers, etc. We're going to fight against Wall Street, etc. Well, when big investors win or lose here, because they are doing this, and again, like I said, professionals get it wrong, they become the forced seller, of which they have to sell something else, which is Apple. And guess what? You are now involved. So you thought I have no interest in MicroStrategy. You may not be interested in Bitcoin or crypto. That doesn't mean that you should just shut off your ears. It's important. Maybe. Ish. Right? Ish. The only way that you can manage this, right? Because you're a spectator. I'm a spectator. I'm an informed spectator. Right? I'm sharing this with you, right? I'm the 1% most informed spectator. Yes, true. But to say you're completely immunized is not correct. And like I said, you just take your simple analogy. This happens. You know someone this happens, right? You know in the financial crisis. Your next door neighbor overextended, went bankrupt. Guess what? Don't tell me that your value of your house stayed the same. It didn't. If you then had to raise the cash or want to move and thought that you were going to get the same value, I have news for you. And I'm not ridiculing you. You're just using your common sense to know the illustration that I'm making right here. Finance is this matter where you have lots of jargon and complicated matters, but ultimately, if you don't go to brain freeze and just get the clear, correct explanation without narratives, right? But correctly grounded principle, you can then use your common sense to get to it. And this is the link. Last thing. We have seen other companies do this. By no means, and I've told you multiple times, and I'm going to say, as far as we know, and I'm going to give them the benefit of the doubt. Absolutely. I am going to do that. You can have all sorts of, debates about this. You can have debate about underlying Bitcoin. We have seen other companies that have basically raised money to trade financial assets. which happened to be energy. So I don't want to say, so unprecedented is true, meaning that unprecedented because the underlying asset is new, still new, and that this ratio is right when 96% of a single company, and then also having this ratio here is the debate. That combination plus the fact that, well, it's linked to why that's 2.5, but the point is that we have seen others, and that was this. Now, this was an accounting matter, right? In other words, the way that they were raising the money, etc., was not correct, to say the least, right? And so when the liquidity stopped for whatever reason, then you pulled back the curtain and you realized, oh, this is not the way that they raised money, wasn't exactly what they had reported. Then you've got a problem. I'm not at all saying that is what's going on here. What I am saying, though, is that let's not pretend as if this type of activity hasn't existed in the past. Right? These are that raising money by itself in order to invest in financial assets itself is not the question. That exists. They shouldn't do this. They shouldn't do that. Okay, hold on a second. You've only posted 20 cents on $100 to buy your primary home, by the way. Right? So let's be real careful before we put on our gown of sanctimony and start throwing rocks. Right? The idea of only putting up X dollars in order to invest in many times X exists. And oh yeah, by the way, the mechanism by which it does that is entirely dependent on what? It's entirely dependent on the ability of capital to move. And that is dependent. Does that mean price insensitive? Never. It depends on price. The price of liquidity? I. Stocks for show, bonds for dough. And that you now then understand every financial crisis, which is when this mechanism by which I is determined malfunctions, then you've got a problem. That has been, and will be the bottom line. All right, that's all I got today. Thank you so much, everybody. jo.substack.com. The free newsletter is out there. There are other stories I'm going to tell, and I'm about to create a little extra addition here to today's video, which will be available for paid subscribers only. The problem with I'm convinced that you can understand finance. I'm convinced of that. Right? The topics here you don't actually need to be able to calculate this stuff. Right? You don't have to know how to calculate. The calculation can be done for you. You just need to know the rationale of how it exists. Right? And then to your individual situation, which can be your different opinion, right? Your idea of the long run is different than the other person. Why? Well, you're a 3-time cancer survivor. You're 95 years old, not 45, right? Your definition of the long run is different. Guess what? Your allocation along this curve, rationally different. All right, everyone. To those of you celebrating Merry Christmas, Happy Holidays. college bowl season here, and Indiana has screwed the pooch. We're back to 14. I think that's it for today.